So it's been 10 years, as you know, since the great crisis, the financial crisis, that you stepped into. Tell us the main way in which the financial system is different today than what you faced when you came in to the Treasury.
Well, it's very, very different today. So let's talk about what I faced. What I faced was a situation where, going back decades, the government had really failed the American people because the financial system had not kept pace with the modern financial markets. The protections that were put in place after the Great Depression to deal with panics were focused on banks, protecting depositors with deposit insurance. Meanwhile, the financial markets changed. And when I arrived, half or more of the credit was flowing outside of the banking system. And we didn't have the oversight we needed. We didn't have the regulatory authorities to deal with the run. And this was a situation where there was a great deal of leverage, there was a great deal of risk. Today, when you look at it, we see a situation where the banks are better capitalized. We have much better regulatory oversight. I think there's fewer gaps. I think we have a better set of authorities. There's less what I would call dry tinder. There's less excesses. So I think there's less risk, although these things are unpredictable, of having any kind of a major financial crisis. On the one hand, and there's some important new authorities, but some of the things we relied very heavily on have been taken away. So I wish we had a few more protections.
Well, I want to come back to that, but another way that the financial system has changed, it strikes me, is the growth of some money managers, for example. You got a BlackRock, well over $1 trillion now.
Right.
Even a SoftBank that's raising $100 billion
Right.
to put in a venture capital. You have a lot of money that's outside of the banking system, outside of those regulatory structures that you talk about.
We still do, but not as much as we did. I mean, you've named a couple, and there's a couple more. And I would like to see, more protections. That we have orderly liquidation authority to wind down an institution which is failing. I wish we had that, for instance, to deal with Lehman Brothers. Mm-hmm. But we don't have the authorities we need as broadly as we need them outside of the banking system. But the thing that would be most concerned about are some of the authorities we used to stop the panic. The Exchange Stabilization Fund at Treasury we used to guarantee the money markets. Remember, there was a run on $30 trillion in the money, $3.5 trillion, $30 trillion. This is, there's 30 million Americans, $3.5 trillion in the money markets. And the money markets were funding short-term borrowings from many of the biggest companies in the world. So when the money markets began to implode, the commercial paper market dried up. As these big companies started cutting back on their short-term funding, this would have moved very quickly to their suppliers, to smaller industrial companies. Could have been disastrous, but we stepped in and we used the Exchange Stabilization Fund to guarantee the money markets. We no longer have that authority. The authority that the FDIC used, that Sheila Bair used so courageously to guarantee the unsecured liabilities of bank holding companies, Dodd-Frank took that away. So we don't have some protections, but we have some important new ones.
Well, you lost some of the legal provisions that you described. What about political? Because one of the things that you had going for you, and I know it was difficult and was not all in a straight line, but through that crisis, you got Congress, you had a president, even with low approval ratings, to really back you. Do we still have that same political capital or political competence, given what happened last time?
Yes. I think that's really a key question. But I want to begin by saying when I arrived in 2006, President Bush was at a low point in his approval rating. I mean, he was in the high 20s. 40% would have seemed high then. And there was a very poisonous atmosphere in Congress. But I had a president that really encouraged me to develop relationships with Democrats as well as Republicans. And fortunately, I had a year to do that before the crisis, to get some things done, stimulus with Nancy Pelosi and with John Boehner, and to do some trade deals and so on. So, and to develop the relationship with the president. So twice we had a Congress come together on a bipartisan basis to give Treasury unprecedented authorities for Fannie and Freddie and then for TARP. And I'm proud of that, and I'm proud of the policy continuity across administrations. But I'm never going to bet against our government's ability to do that in the future. A crisis, the financial crisis brought out in some ways the worst in America in terms of greed and the problems in some of our regulatory systems and so on. But at the end, people came together, and I would really like to believe if we, God forbid, had another crisis like this, that the country could come together. But you're right, the things we did were so unpopular that I think it's going to make it even more difficult for our successors.